Tax-free countries for business are those countries where businesses are not required to pay taxes on their profits or are subject to very low tax rates. While such countries are rare, there are some places where businesses can operate without paying taxes on their profits. So in this video, we are going to discuss tax-free countries for business. Now before we get into this video, make sure to hit that subscribe button and leave a comment below saying I subscribed. I will try my best to reply to as many comments as possible. Number 10. Qatar. At first glance, Qatar appears to be strikingly similar to its neighbors in the Gulf region. It's a small, wealthy country which earned its fortune in the oil industry. Its culture is highly conservative yet rapidly modernizing thanks to the foreign investment and influence. And of course, its oil and gas revenue allows the government to stay afloat without levying any income tax. Despite these similarities, Qatar is a fascinating country due to its particularly high level of development and role in the world politics. And despite its small size, Qatar has the highest per capita income in the world. Number 9. Oman. Like most other Middle East countries, Oman is a wealthy and entrepreneurial nation that has no need for income tax thanks to its oil and gas industry. Additionally, despite its massive oil and gas reserves, it has made efforts to diversify its economy and open its markets to new opportunities. Oman is a tax-free country for businesses, meaning that there is no personal income tax or any individual tax levied in Oman. Corporate tax is payable by Omani companies and foreign entities that have a permanent establishment in Oman at the rate of 15% of profits. There is no tax-free threshold, but entities whose main activity is in the industrial sector may be granted a tax exemption. Income derived from the sale of oil and gas originating in Oman is taxed at a rate of 55%. However, the government of Oman pays the tax obligations in certain cases. Goods across the GCC countries move free of customs duties. Number 8. Monaco. Monaco is often considered a tax haven due to its favorable personal and corporate tax rules. The country does not tax individuals on their income, and corporations that make 75% or more of their profits within the country are tax exempt. However, there are some exceptions to this rule. For example, companies must demonstrate that 75% or more of their profits are generated domestically, and companies with profits exceeding 25% from outside of Monaco are taxed at a rate of 33.33%. Located near Italy, it is just hours away from some of the major cities in Europe and has a beautiful setting and high quality of life. The fact that Monaco does not levy any income tax attracts a lot of Europeans to set up their entities in Monaco. Number 7. British Virgin Islands. The British Virgin Islands are a British overseas territory located in the Caribbean with a population of around 40,000. The currency of the British Virgin Islands is the US dollar, which makes it easier to trade with the US. They prefer to style themselves as modern offshore financial center with no foreign exchange controls. Number 6. Kuwait. Kuwait is a tax-free country for individuals, and it does not impose any personal taxes on its citizens. However, foreign companies are subject to corporate taxes, and the current corporate income tax rate in Kuwait is 15%. Companies wholly owned by nationals of Kuwait or other Gulf Cooperation Council (GCC) countries are exempt from corporate income tax. Kuwait is one of the most expat-friendly countries in the world, and foreign citizens make up 2/3 of the population. Obtaining permanent residency in Kuwait generally requires having Kuwaiti relatives or formal employment within the country. Living permanently in Kuwait's tax-free haven is near impossible, so it may not be the best choice for a tax strategy. Like other Gulf countries on the list, Kuwait also doesn't levy any taxes on the income earned, and the Gulf earns revenue primarily from the sale of oil. It is also an expat-friendly country, and foreign citizens make 2/3 of the total population of Kuwait. It is important to note here that only the companies operating from the free trade zones are exempted from the levy of corporate tax. Number 5. Cayman Islands. Like the Bahamas, The scenic beaches of Cayman Islands attract a lot of tourists to keep its government afloat and flush with so much funds that it does not feel the need to levy any taxes. It is a self-governing British overseas territory with a total area of 264 square km and comprises of the 3 islands of Grand Cayman, Cayman Brac, and Little Cayman. The Cayman Islands are also considered as the world's offshore financial center for international businesses and wealthy individuals, largely as a result of the state not charging taxes on the income earned. Number 4. Panama. Panama is the oldest and best-known tax haven in the Caribbean, as well as one of the most established in the region. Panama's offshore sector is intimately tied to the Panama Canal, which has made it a gateway for international trade. Panama imposes no tax on offshore entities which engage in business outside of Panama. Number 3. Bermuda. This British island in the North Atlantic Ocean is known for its pink sand beaches and for its zero tax policy. It comprises of 181 islands with a total land area of 54 square km and a population of 70,000 people. More than 500,000 tourists visit Bermuda every year, out of which more than 80% are from the United States. Number 2. The Bahamas. Bahamas undoubtedly is one of the most popular tourist destinations across the globe and derives most of its revenue from tourism, and does not charge any corporate tax or income tax, is only levied on the revenues derived locally and not on profits earned from outside the Bahamas. Number 1. United Arab Emirates. When we talk about zero taxes, the name which comes on top of everybody's mind is the United Arab Emirates. Out of all the tax-free nations, it is the nation which is the most developed and the most appealing tax-free country in this list. Apart from its tax-free status, a lot of people set up companies in the United Arab Emirates, not only because of zero tax, but also because its economy is booming and there are a lot of business opportunities. Not only do people move there because of their zero tax regime, but also move to the UAE to expand their business in the UAE. It is important to note here that from 2023, UAE is also introducing a 9% corporate tax on mainland companies, that is on companies which do business locally in the UAE. However, no tax would be levied on free zone companies, that is companies which do business outside of the UAE. So, if your client base is outside of UAE in countries like US, Canada, Australia, etc., you can set up a company in a free zone. Free zone companies are completely tax exempt for a period of 50 years, and it is for this reason that entrepreneurs prefer to incorporate a company in a free zone rather than incorporating a company in mainland. Let us know your opinion in the comments section below. This was all for today. Hope you liked the video. Subscribe to our channel and stay tuned for more interesting videos. Stay safe, and we will be back soon with another video.